Good day, all. Ira Epstein, Linn Associates, with your financial market wrap-up. And this is for Wednesday, March 11th, 2020, about just after 5:10 p.m. Central Time. I'm going to wear my glasses in a moment here as one of my eyes giving me a problem. But to make a long story short, today was one of those washout days again. The World Health Organization announced that the COVID-19 is now a pandemic. I think we've known that, so I wouldn't panic if I were you, because all you got to do is read the newspaper. The NCAA tournament, March Madness, male and female, no fans are going to be allowed in the stadiums. Golden State Warriors, no fans allowed in the stadium. It's just going to keep spreading. And one of the things that I keep telling people about is you got to understand the curve of viruses. It's not new. This was discovered in 1840. It's called, I think, FAR. Google it and you'll understand. But there's a curve where the virus starts, be it influenza. It starts, it picks up, it has a crescendo, and it comes down. How often do we hear on the news the end of the flu season? So we're in that. We're coming up the line. Italy's probably close to up here. China's already gone down the other side. We don't know if it'll return or not, but that seems to be what's going on. The president's going to talk tonight to the nation. And he met today with the heads of banks. He's been meeting with people. I don't know what he can or can't do. Congress seems to have decided against the payroll tax, but the president can delay income tax payments. He can do other things. We'll see what they're about to do. We saw Britain today make a move. The UK, they came out. The Bank of England made their emergency cut, down 0.5 point on their rate. They only have a 1/4 point left, so they got one bullet in their gun, so to speak. That doesn't mean they can't do quantitative easing in the government, which they're doing. They're spending billions now to go to that other side of the equation. As I repeated all week, it's a question of timing. When does your dollar get you the best bang? You can't stop the virus with money. If there's no vaccine, there's no vaccine. You can throw all the money you want at it. You still don't have it. So the market's been reacting. Now the market's looking tonight to see what the president says. I get that. So if we look at the weekly area chart of closes, you see that this market has been falling down pretty hard. It's getting a little bounce back, and for the week we're down in the S&P 200 points. Did we enter bear market territory? Well, we certainly about hit it. We were down 19 point some odd percent. You closed in bear market territory in the Dow. To get out of it, you got to get a rally back up 10% from here. We'll see if that occurs. But right now, you can see the big break that's occurred in the market. You didn't make a lower low than you did on Monday, and now the market's trying to give you a little bit of a bounce, if you will. Okay, what's the trend? Well, at this point, you have lower highs, and you certainly have lower lows. Bearish. What else have we had? We've had crossovers that have been major warning signals that I've been bringing up to you. Here's the 18, the 100, the 200-day. The market, if you'll recall when I did my stock index special video report, I had measured from the top to this bottom and pointed out we had a 50% correction in the S&P, the Dow, and the NASDAQ. You only got about 1/3 of the way in the Russell, the weakest. The market then broke through everything. This was obviously over the weekend. You get that news about COVID. You tried bouncing, and today failing, and now tonight you're playing around. Is the market's waiting? There's no miracle from the government. There's no miracle to stop this. You can cushion the economics. You can make life better for people, not as miserable as it could be if you're stuck without pay for 2 weeks, things of that nature. That's what we have to focus on. Then throw the bazooka, if you will, at the market when we enter the other side of the virus peak. As you look at Bollinger Bands, you've hit them, you're bouncing to the right. That's all you're doing. You're not changing the trend. And get nervous, because the 18-day average is likely to cross under the 200. That's an awful lot of resistance if you get up to that average again. And if you get the crossover, it's often a sign that the market wants to poke a bit lower. Momentum-wise, you're oversold. Verging, not yet, into embedded, where you've locked in the momentum again to the downside. But this is one hellacious break. It'll scare people, and that's what you're dealing with. In the NASDAQ, same thing. Oversold. You would hit the Bollinger Band, rallied back to the 200-day average, and that's a resistance point. The trend is down. And again, I'm watching this 18-day average getting ready to challenge the 200. There's nothing pretty on these charts. One other point. You're going to have a weekend coming up. I said at the beginning of the week, you get that Monday down, Tuesday reversal sometimes, and then you're playing, but you're going to go through this scenario again this weekend. We're not going to hear less COVID-19 cases. Not my opinion. I'm not a doctor. I'm listening to the government. I'm listening to the CDC. Every day it's going to get worse for the time. We're seeing events canceled, people staying home. It's going to hurt businesses galore, and that's what you're dealing with. You'll get through this too. But right now, this is the test of the Trump administration. Not that he wanted it, but it's what he's got to deal with. Oversold, hit the Bollinger Band, getting a bounce, but a bear trend in place. Bear market. Russell, bear market. Embedded reading. This is even worse than the others. And your warning sign, when you add that crossover right here, look what this market's been doing. A lot of algorithms watch moving average crossovers. I've learned over the years how transitioning from being on the floor early in my career to going to computers, what do they do? And of course, in the last 20 years, it's changed dramatically to the point right now where there's just a lot of algorithms that do the trading, and you have to understand some of what they might program in. I couldn't write that code, but I understand some of what they're doing. As you look at the VIX, higher lows, higher highs. Yeah, you're overbought. You got over the Bollinger Band, but you haven't entered this exited the uptrend. You've got to take out 43.56 to tell me that that is happening. In the T-bond market, I warned just yesterday my clients, and I think we were talking, this was the close of business Monday. Yesterday, you lost the embedded reading. I get nervous when you lose an embedded reading. It means that the upside momentum's been lost, and unless it regains itself right away, the odds favor that price and the closest moving average are going to make a run at each other. I still think that that's very much in the cards. You're seeing a little more of that in the 10-year notes. You've lost it there too. You saw it in TLT if you're watching that. The dollar index, lower highs, lower lows, and a bounce. What happened in this market though? Watch, this is an embedded reading, and yesterday you started losing the reading, and today you confirmed that it's lost. I can't tell you where the market's going, but I wouldn't be surprised if the 100-day average is somewhere in the market's target. Eurocurrency, you lost the embedded reading. You had it. This was the close of business yesterday. Today you lose it. It's enough for me. I think that now the market's vulnerable to price and these moving average making a run. I don't know why, but I know it's a warning sign that the momentum on the upside or the momentum on the downside is changed. In the end, you lost the embedded reading. And if you take a look here, you're just spinning your wheel right now. I don't care what the idea is here. There's conflicting signals, by the way. Let me show you this. Here you have the 18 under the 100. Now it gets over it with the lost embedded reading. That's a pretty rare event. But does it mean that momentum is predicting price is going to slip and that this signal may not make a higher high? I'm not sure. But when I get a conflict, I recognize the conflict and I put no credence then on me wanting to do anything. In Bitcoin, well, Bitcoin, where's the halving event? Remember we had heard the market's going to go up? That event's not going to change. But what has changed is people need money for everything. You get scared in the stock market, money stops being spent. Hey, hon, we're not buying that thing. We're not going to do the room edition that we needed. We're going to be a little careful right now. You've heard these talks. Well, you start selling things that would otherwise not be a liquid to you. Then you take a look at the crude versus Brent. Well, you're watching this massive narrowing take place in it. So the differential's gone from about $5 a barrel to $2.50. And we know what's going on. You know, you're in a trade war. You're at the point where it's a tit for tat, and we're watching OPEC members threatening to increase production. Not what they can do now, but they're moving forward spending so that they have 1.5 million more barrels a day that they're going to be able to do. And of course, Russia still being quiet. So nobody wins on that. You got under the Bollinger Band, and I know the temptation, well, the market's just going to zero. Markets have a way of not staying up under Bollinger Bands, and you're getting a little bit of a correction in it right now. You've moved back to the right-hand side is what's basically going on in an oversold market. You know, there's flash signals here. I don't care if the world thinks it's going to 20 bucks. There's got to be a better technical point for chartists. And chartists wait for their spots to enter. That doesn't mean they win when they wait for their spot. The world is full of people like me that have plenty of losses in the markets when they think they've got the right setup and it's not there. But it's a matter of consistency, not to lose, but doing the same event that you think is right over and over without you thinking about it. That's the key. This has got to be built into your mentality. All you've done in gasoline is move to the right-hand side of the Bollinger Band with an embedded reading. That's bearish as can be. And in nat gas, you've gone from lower band to upper band, which is often a sign where the market's caught in this nothing. You've got a lower low, higher high. We know the market got the boost because of lower oil prices and the idea that production's going to be cut, and that changed it. So now we're waiting to see if we get the supply-demand equation coming in. So what I do in the mornings for each one of you is that are a subscriber of mine. I'm up at I wake up about 4:30 and I read like a madman in the morning, my coffee in hand, yep. I'm reading all the different news wires I can, trying to read papers coming in from China, certain telegraphs there and others, and give you an idea what the world is saying. Then I'm also telling you what the day's reports are going to be, and then my charts will look like this. I'm not in the studio. I'm recording this on my computer. I create a video with technical and fundamental analysis giving you specific points of entry, exit, profit objectives, and saying at times just what I'm saying. Got to be careful here. More than careful. Maybe it's where you keep your hands in your pocket. You take your shot. If you don't like what's happening, have risk controls. Everything's about risk. Everything in trading is not about emotion. If you let your emotion run your day, you're in trouble. And there's a time where markets get taken over by the pros, not by you, the typical investor. Understand that. And in my video, I cover all these different sectors and I walk you through as best as I can what is happening. And when I feel the market, excuse me, is there for a trade, I'm going to tell you to pull the trigger. That doesn't mean you should. That's what I think in the market. So if I'm thinking it, you may think, I don't like what Ira was saying, or hey, I was thinking that, maybe that's the idea that I wanted. I see the logic, whatever. Go to our website. Under the word research, it tells you all about the subscriber video. We hope you join us, and I'm Ira Epstein.